Hi Naked Delta subscribers, just a quick refresher here on how to use the NDM and liquidity charts to aid with your entries and exits. Just quickly here, we'll start on the most basic of the charts. I'm just going to remove gamma here, which is the gamma of open interest, not the gamma of options. It's of their open interest, the total cost of hedging them. So we can see here that a lot of the couple of lines displayed here, firstly is the 30 to 60 day IV. Then we have the up here in the brown, that's the purple. Up here in the brown we have DPI, dark pool interest. We can see this gradually rising with the price. You can see that that's generally hedging, and when the price goes down, because it's being hedged and the market's selling, the DPI is shrinking. DPI is dark pool interest. It is the total trades for the day, which have to be reported. Over-the-counter trades have to be reported to FINRA at the end of the day. It's not the lit market trades, it's the over-the-counter or dark pool trading. It's pretty much supporting the dealers. It allows them to enter a sale at the midpoint of the spread rather than at the bid or the ask. What that means is that there's an agreed price between a larger market maker and a smaller dealer who's requiring liquidity. Option traders like it. They can go there. They don't have to fight for the bid or the ask. They just have an agreed price with a supplier, and that allows them to hedge off their deltas and hedge them off regularly without affecting and having price discovery from their hedging. We can definitely see that hedging goes with price, and to a certain degree that IV does. But it definitely buying at the center rather than at the bid or the ask has less price discovery than otherwise. We can see here we've had a rather large buy over this period. On either side, we've had just hedging with a couple of peaks of some extra buying here in coin. This is the 15 NDM. At the moment, I've got all DTEs. We can change these filters, but here I've got all DTEs being expressed. So that is all the option positions that are open in coin at the moment. Green is calls, red is puts, and we can see the put and call ratio here of the in the money or at the money to in the money options. I look at these for long positionings. It's a nice easy way to establish what the positions are. On any given day when I go and look at the current positioning, I might start out with a couple of months looking there to see what's happened over the recent period, but I then would trim it down to looking at just a shorter period here. You can see that we've had a big period of long plus some hedging out from the top here. You can see a lot of hedging going in there where we saw that recent top in November. Back up here we saw this recent top. And then that hedging has been reduced, and also a lot of these sold calls have been reduced. They've reduced at the end of the OPEX period. We see a sharp line there. We can see that both out of the money, which are hidden here in this filter with a blurring screen. If we unclick the filter, we could quickly see that there's a lot more positions behind there. We can see they have been reduced as well on that on the 22nd of December. Now we only really require, when we're looking at any given period, if we've established we're into a new rising period or a new selling period, we only really need the most recent month to be able to establish what's happening. So we can see here we've had a lot of the out of the money buying here, and in both puts and calls. When we see out of the money buying or opening of puts and calls, we can have a guess that these calls are probably sold, and they're sold to buy these puts. That is the standard structure of the market, and that's an important thing to realize, that when we're looking at these NakedDelta Matrix, that there's a very systematic way that the market is traded to make trading cheaper and more efficient, and that's what we look for. a lot of the smaller stocks and the meme stocks are not traded in a traditional way, and you will have a lot of difficulty finding sense in the matrix. And I do too, and I've looked at it for many years now, and I still don't understand all of the nuances. We can only just have some rough rules and have it aid the way that we are looking to see what's happening. We can see here we've had some good buying since the 7th in out of the money where we started getting to this bottom. We've had some good opening of out of the money calls. Some of it will have been buying, a lot of it will have been selling, and here it's been paying for out of the money puts. And the fact that we've seen a whole lot of in the money puts closed means that that bottom is in. We can see it's really shifted to out of money. Now if I put this filter back on to 0.5, I like 0.5 because it shows me where the serious money is, because these are the high delta risks. And so we can see that we've had a good increase, and we've slowly seen this put call ratio slowly decrease, and we can also see that it's headed towards the at the money. So the actual deltas here being hedged are much smaller than they would be if they were over here in the 1 delta zone very in the money. These at the money ones here will quite quickly move out of the money as the price goes up. So very quickly then, so that's I have it set on all. I have filters set on 0.5. I would then press the 30 NDM to have a look at how that looks in the 30 NDM, which is just a much finer, more nuanced product. It really lets me spread it out, and you can really see what's happening here. So we saw here today a big closing of at the money. So I would have thought that these were probably sold somewhere near this top at the 6th here. So if we went and had a look at the price at the 6th, we can see the 6th is here at the top. So people have sold here. If I just unblock this so you can see, unfilter this, you'll see that these positions here they jumped on them here between the 5th and the 6th, and they've held them for that period of time, and then they've taken them out, and that's because they were sold, and that means we're ready to rise in coin. Coin still does have a little bit of hedging here. I can see if I go down to what I really want to see, which is this chart here, and I'll just put that back at 50. You'll still see it has quite a large column here at the money hedging, but it has reduced from maxing out at 35,000 at the money strong puts. So in that 0.5 to 0.7 delta, it's gone down to about 24,000. There was a big drop today of over 25% of them reduced, and we had a similar here. We had a big reduction in the ones at the money that had been sold, and a slight increase here in the money. The other things that we can notice from today was we didn't have much price discovery, but we had the DPI going up. So just remember that when we go to the look at what is the current trading, we go down to just 0 to 30. That's where these short dated trades are happening. You don't need to filter it more than that. If you start taking these filters down, the only time I might take it down to 12 to 16 or out to 45 is when I come to an OPEX and I've got overlapping contract dates. For the nature of contracts, we've tried to keep it simple here. It's much more generic than worrying about the changing option dates, option expiries on different days of the week. So I would go to one or the other side of it as I approach OPEX. So we will find sometime this week that we'll get a block of color come through. So that's quickly looking at how those matrix work. So remember that the basic trades are that we would have a synthetic long call position, which is really a synthetic stock position. We're getting leverage from it. Down here in these 0 to 30, we're getting a high gamma of the underlying, so the price is swinging a lot around, the value of the contracts are swinging a lot around at the money as they come close to expiry, and so that this hedging just disappears into no value very quickly. So these people are risking a lot more than other people because the period of the contract is so short, and so we have the gamma expiring much more quickly. So the other thing to notice is we also get weekly rolls. So a lot of this coming off today is weekly rolls, and that's the reason that we're seeing a bounce on a Monday, and we're going to probably have a strong week. It's a difficult week to trade going into OPEX. That gamma might knock the price around a little bit. Now, I hope that you have listened to a couple of the main ideas here. That is the 0 to 30 in the 30 NDM and all in the 15 NDM to see those longer dated positions. Not all stocks are going to give you clarity here. If I just wanted to put in, say, I put in Baba move today, and you'll see that that Alibaba it is still reasonably clear, but you can see there's quite a lot of heavy hedging in there, which it makes it a little bit foggy. And that is the nature of it being owned and being hedged. It's in a lot of ETFs, and so we see a lot of structural hedging in this longer dated stuff. If we went into if we went into Alibaba here in the shorter dated stuff, it's reasonably clean, but you can see a lot has just rolled off. It's nowhere near as clear and obvious as we were just seeing in coin. A lot of that is to do with just the incredible leap today in prices, and so there was some profit taking. We saw here earlier in this period here that we had another profit take around here when we bumped up between the 5th and the 6th. If we were looking at Baba, the price again moved substantially on that day, and if we have a look at this price, here we go, from the 7th to the 8th. Am I correct there? Oh no. There's the price discovery here was between the 8th and the 9th, but if I just rolled that back to the 8th, let's have a look what that looks like. Oh, we can see here at the 6th, 5th to the 6th, there's a jump, so it's not as obvious. But here again, we've got some nice clarity of this rolling up. If you have any questions about the matrix and how to use the matrix and how to read it, anything that I've missed, just drop me a line and I'll be happy to answer it. Thank you very much.